Okay, so hello again. This is Pablo Vittori. I'm from Globant. Welcome to the webinar of mobile payments we will host today. A special thanks for our EVP, Mario Shiliashki, who is running the mobile strategies on payments on Mastercard. That he will help us to explain and get some insights about the mobile payment ecosystem in the finance market. We are hosting this webinar today from Globant. As you may know, Globant is a company that was created in Argentina in 2003, and we are now working with companies around the globe. Most of our customers and brands that trust us for the projects we are running are based on the States and in Europe. We have development centers distributed along Latin America, the States, Europe, and now in India. And we are working together with big brands, providing experiences for final users, corporate applications, and systems around different areas where we can provide a new experience and new user experiences in traditional applications. The company was created based on the technology background that we have in Latin America, and we extended that technology knowledge and that background in different areas. Each studio that we have on the company is devoted, and it's the deep pocket of expertise in the technology vertical that is assigned to each studio. Every time we see a new trend or a technology stack that needs to be covered by developers, engineers, architects, we create a new studio. Today we will talk about mobile trends, in particular to payments, and we created a few years ago the mobile studio. This actually have over 350 developers working in native applications for several customers, including banking, finance, retail, entertainment. And the experience that we have together in the mobile studio in particular are helping different companies and different institutions to get more traction and presence on the mobile market that today it's leading the development efforts around the world with the massive adoption of mobile platforms. As I mentioned before, Mario Shiliashki is the Senior Vice President of Emerging Payments at Mastercard. I will give us an insight of the technologies behind the mobile payments, the scalability that we will have in the market today. So thank you, Mario, for joining us today. Let's start with the presentation, and we will have a question and answer session after Mario's presentation. Thank you very much, Mario, and welcome.
Thank you, Pablo. Thank you for the nice introduction. Very happy to be here, and very much looking forward to all the questions. Great. So again, thanks for the introduction. Just a brief second. I'll talk about how we think about scaling mobile payments, right? So a lot of talk has been going on right now in the payments community and indeed community overall, mobile and internet, about mobile payments, mobile wallets. How do we scale those, and what is the path to growth and adoption by consumers and merchants? And this somewhat provocative slide, you may think, what does a day at the beach surfing with your family have to do with payments? I think that's precisely the point. The journey to scale is everyday use, and generally, the way I think about it, people don't get up in the morning wanting to pay for things, right? They get up in the morning thinking, I need to go to the beach and spend a great time with my family, as I'm sure a lot of us here, at least in the US, are looking forward to for the long weekend. Hopefully here in the Northeast, weather permits to actually spend some good time at the beach. The point of this is, in order for mobile payments to really take off, and I think they are taking off, all of us within the mobile payments community need to focus on how to make the consumer experience around shopping and around engagement better, with payments being a necessary, important, critical step in the process, but not the whole point of the process, right? Payments is an enabler. It's not the point of mobile adoption. So the way we think about commerce generally is that it's changing right now based on the fact that not only do we carry a lot of connected devices on us and with us, from the PC to the mobile phone to a tablet, but we also interact with mobile connected devices around us. So our cars are more and more connected to the internet. Our watches are becoming connected to the internet. Our home security systems and thermostats in our house, like a Nest device, is being connected to the internet. And more we're seeing prototypes. If you've been to the Consumer Electronics Show, you've seen a lot of the prototypes around connected fridges and connected washing machines and so forth. All of these devices, we believe, because they're connected to each other and to the internet, can become commerce devices and can become ultimately the interactive layer between the consumer and the merchant. Our goal within Mastercard is to enable all of these devices to be connected to our payments network, and for all of those devices to provide a fantastic opportunity for a shopping experience or for a commerce experience. The trend that we see in mobile is the consumer wants to shop anywhere, at any point, on any device, for anything they would like. That's happening more and more, and startups and large companies alike are focusing on that best-in-class consumer experience. Okay. I hope you can all hear me now still. Great. So with that, the way we think about it at Mastercard is we're transitioning from a world of plastic to a world of connected devices, a world what we call beyond plastic. And it's not just about mobile devices, it's about any connected device. The opportunity that's presented to us as a company and as an ecosystem provider of a network of payments is massive, to go from just the layer of during the purchase process and enabling that payment during the purchase transaction to a much broader set of services we can provide. All the way from information, data services, analytics about what to buy, when to buy, where to buy, things like targeting offers and rewards and loyalty programs, communication services, all the way to all the different ways you can pay or should be able to pay, whether it's in the store, in the aisle, at the store, with a mobile device, whether it's with a card, whether it's with a different account, the way to authenticate ourselves, whether right now the authentication capabilities are somewhat limited to either a signature or a PIN at the point of sale, or a password if you're going online. Where we need to get to is that kind of multi-factor authentication, where we're using biometrics, we're using other behavioral analytics, we're using environmental factors that we can all put into a much safer and more secure payment methods. All the way to then, after the transaction history, in terms of payment history, in terms of loyalty, in terms of promoting the merchant and consumer interaction that is meaningful and purposeful. All of that, I think, is becoming ultimately much more possible and much more reachable because we're all interacting with these connected devices, and because we think through the Mastercard network, we can connect all of those. How we think about that. One of the most critical components to all of these connected devices, connecting to each other, to the internet, and to our network of payments, is security, right? So we have built our network on security for the past 60 years, and we continue to make sure that every single payment on the Mastercard network and beyond is as secure as possible. We think actually that all of the connected devices together could provide us with even more secure transactions than what we're used to right now in the physical world, not to speak of the digital world. We think of these in kind of three main aspects. One is at the point of sale. There, the EMV standard with encryption and cryptography of the actual transactions when they go through the payment network and the terminals is paramount. We're doing a lot to enhance those. The second is securing online transactions, and we're introducing a lot of products to do that with our wallet platform, MasterPass, things like monitoring solutions and transaction security solutions. And then the third layer is at the mobile layer, or the connected device layer, where we believe that tokenization and digitization of the card credentials is the way to really secure the transactions and get away from the world we live in today, where people and merchants are worried about data breaches, and it seems like data breaches are happening fast and furious with large merchants. Our belief is that we will get to a point where we can tokenize all credentials online and in the mobile device, so that the data that runs through and is exposed to the internet for potential fraudsters to capture is useless. And I'll talk a little bit more about that. First, let me give you a sense of what I mean by securing the transactions and how we think securing the digital channel better can actually unlock a lot of potential that is pent up right now in people wanting to buy, wanting to shop digitally, but being declined. So one of the most frustrating things for all of us as consumers, and I'm sure all of us with very few exceptions have experienced this, where especially if you do it cross-border, you're in one location, but really you live in a different location, you're traveling or something, and all of a sudden your card gets declined because you can't, because the issuer, the bank that issued you the card thinks this is not a legitimate transaction. So by our estimations and industry estimations, we think there's actually quite a lot of fraud in the digital channel as compared to the physical channel. So at the point of sale, the fraud rate is very minimal, and therefore the approval rate, so every single transaction that gets presented to be approved at the point of sale with a card, 96% of all those transactions get approved. So there's really only a 4% decline rate, and the majority of those are legitimately declined transactions, either because the person didn't have money in their account or because it was a stolen card or something like that, right? Compare that to the digital world. Digital world being mobile payments, e-commerce payments via web browser or in-app. There, the decline rate is something like 80%. Sorry, the approval rate is 80%. So 20% of transactions get declined. Now, some of those are legitimate, but we've seen studies and believe that about 80% of all those declines in the digital world are what we call false positives, i.e., those that should have been transactions that should have been approved, but they weren't approved. And that results not only in loss of sale to the merchant, but also in a really negative consumer experience when you know your card should work, you know you have the card with you, you're the one transacting at the device, and yet the issuer says, no, sorry, we don't think it's you, or we think this is a risky transaction, so we won't let it through. And so we think actually by doing a greater job of securing payments better in the digital world, we can unlock all this value and get this approval rate, you know, from 80% today all the way to hopefully 96% and above tomorrow. And by tomorrow, I mean the next few months and years. And ultimately, how do we do that? Ultimately, we believe that the only way we really secure transactions is to make the information that is out there in the ether, flowing in servers and being exposed for potential fraudsters to capture. We make that information completely useless. And the way to do that is a process we call tokenization. What we mean is replacing all of the 16-digit card numbers that you currently put in, or we all put into checkout browsers and fields when it says, what's your credit card number, what's your expiration date, what's your CVC, and so forth. Replacing all of that with tokens. So that really the only place you can see your 16-digit number is on the card itself. And everywhere else, you store the card, whether it's in digital wallets, whether it's in mobile wallets, whether it's in the card-on-file systems of merchants like Amazon or iTunes or whatever other merchant. Those are digitized and tokenized credentials so that fraudsters actually cannot get access to those. Those are not only tokenized, but also they're encrypted, and every single time there's a transaction, there's what we call a cryptogram, or a key that goes along with the transaction that is a single-use key. It's a unique key to that particular transaction, to that environment, that makes the reproduction of that key next to impossible. And so we think that is really the only way that we can truly secure transactions and make them even more secure than in the physical world. And that's what we're doing. Right? So on the next slide, what we are doing is putting out products, solutions, and platforms by which we can secure these digital transactions, we can enable the digital transactions, and provide those services to players like Apple, like Google, like Samsung. So as an example, the service behind Apple Pay is what we call the Mastercard Digital Enablement Service, which is the tokenization and digitization of the card credentials that I talked about, so that what's stored in Apple Pay is simply a token, not the card number itself, and that makes it ultimately much more secure than even a physical point of sale transaction. That we're rolling out to other partners and across the ecosystem. We're doing that ultimately by exposing a lot of our products and services and platforms via APIs. So we started this process a couple of years ago, where a lot of select number of services and platforms we're exposing via APIs to the broader world, beyond our traditional customers of issuers and acquirers, to a broader set of customers and digital natives that can take advantage of the services we offer, whether it's digitization, monetization, whether it's data services, the recent announcement of Mastercard Send that was made a couple of days ago, MasterPass, and a lot of other products. All of them are available on developer.mastercard.com, so go check it out. And ultimately, the goal of this, going back to the beginning, is to enable innovation in the space, in the belief that connecting devices and connecting consumers and merchants through these devices ultimately should lead to a better, more convenient, and more secure consumer experience in the purchasing process. And I'll end with just a quick statement around mobile wallets, because I know a lot of the questions that were submitted ahead of this webinar had to do with mobile wallets, and so I wanted to address some of this with this slide that I found kind of interesting and intriguing. So this is a slide from fairly recent, September last year. It was a survey done by Phoenix Marketing, independent body. And the question that was asked of consumers who own a smartphone and are likely to try a payment application was, which of the following companies or entities would you consider enabling or powering your mobile wallet? Or where would you want to obtain a mobile wallet from? And interestingly, what came at the top of the list were the banks. And so that to me says two things. Banks are still very relevant in digital payments, in mobile payments, and providing mobile payment services to their consumer base. And I think the reason is most consumers have trust in their financial institution. They trust them with their finances. Now, not every single one, of course, but in general statement, they trust them with their money. And creating a mobile wallet that ultimately stores your payment credentials is something that requires that kind of trust. Number 3 on the list was PayPal. Mobile network operators were the 4th on the list with Amazon, Apple, and Google kind of towards the bottom. This will probably change, right? This is a very, very dynamic marketplace, but I wanted to just put that out there to make sure that we don't throw away as we talked about mobile payment startups and lots of VC investment going into the space right now. I think rightly, there is still a lot of room for innovation by and with the traditional banking institutions who still control a lot of the trust or harness a lot of the trust consumers have. Our very own mobile platform for enabling digital wallets, we call Masterpass, is focused on enabling all kinds of players, pretty much all of the players here that are on this slide, from banks to digital players, to merchants themselves, to mobile network operators, to create their own payment solutions and create their own wallets, and we can do that through Masterpass. So the belief there is, again, very dynamic marketplace. We think large and small players alike have a chance to win. And again, going back to my first slide, the way we think we can make that a reality is by focusing on the broader purchasing or broader shopping experience and not so much on the payment itself. And one example I'll leave you with before we kind of open it up to Q&A is something that's been talked about quite a lot, but I think it's a good example of how payments are an enabler, potentially an enabler for an even better experience than otherwise can be possible, but really hidden in the background. And that example is Uber. A lot of us have used Uber, and it's a fantastic service, right? The fact that, and what makes it fantastic is the fact that now we're able to connect a driver or a taxi cab with the consumer waiting in the corner or looking for a limo instantaneously through a very convenient channel of their mobile phone, and all the bells and whistles about seeing the car coming and circling the block to find parking space and so forth, and being able to communicate directly with the driver. All of that is very cool and is what kind of makes Uber great. What makes it even better, in my experience, magical, is the fact that you can walk into the car, get to your destination, and walk out without having to look for a credit card, look for cash, look for a phone, nothing, right? Because the payment is there. The driver is certain that he'll get paid or she'll get paid because they have your card credentials, and Uber has ensured that all of those are there through the payments networks. And the consumer is secure that the driver will get paid, and so they can walk out and not be chased down the street by the driver who's saying, "Where's my payment?" Right? That, to me, is what makes it an even more magical experience, where you can walk in, walk out without even having to worry about it, knowing that the payment will just go through. That ultimately is what we think and what think about as mobile payments, right? Where they are, the mobile payment itself works seamlessly, is secure, is as convenient as possible for the consumer, so much so that it's completely in the background, giving both the merchant and the consumer the ability to just enjoy the experience or enjoy the product they're buying. Ultimately, it's about the product, it's about the experience that the merchant provides, and not so much about the payment. So I'll stop there and open it up to questions. Pablo, if you'd like to start, and then we can open it up to the audience later.
Oh yeah, sure. Thank you very much, and it's really, really interesting. We were talking with seeing different questions coming from the audience, and at first of all, if anyone needs to add something or ask a question, just send information on the chat, contact us directly, and we can add those questions. I have a couple of things that we were checking on the questions that we received before, and one of the key topics that we saw on the questions from the assistants was why the mobile wallets were in the market for so long and didn't get the traction. What is your opinion about what's the key driver that is stalling the mobile wallets to be massively adopted on the market?
Great question, and one that I debate all the time. I think there are a couple of factors. One is the fact that for the longest time, mobile wallet providers and companies that are thinking of, dreaming of, or building mobile wallets were really only focused on the payment itself. How do we make the payment better? And while that's ultimately we need to absolutely do, to me, that's really about the security and convenience of the payment and enabling people to pay any which way they want at any point. Really, the focus of the mobile wallet should be, how do I make so what I was saying before, how do I make the consumer interaction with the merchant or the service provider that much better? If you think about Uber, Uber ultimately has a mobile wallet because you ultimately store your card credentials in Uber's system. Do I call that a mobile wallet? Probably not in the sense that we talk about it, Pablo. But ultimately, that's what drives a fantastic consumer experience, just like we were saying. And so I think we're finally getting to the point where that is actually becoming the focus. The focus is becoming, how do we simply embed the payment within the shopping experience rather than creating wallets in and of themselves for the sake of creating wallets, right? So that's, I think, point number one. Point number two is some of the early mobile wallets started out probably ahead of the curve of being able to secure transactions well in the digital world. Now that we have more and more connected devices beyond the phones that we carry with us, mobile phones and tablets and PCs we carry with us, to the connected watches, smart watches, to connected cars and so forth, we're able to secure the transaction and authenticate the consumer who is presenting themselves as the owner of those card credentials much better and much more conveniently. We're finally at the point where we have convenience and security coming together. Heretofore we've been living in a world where if we wanted to make it something really convenient from a payment perspective, it was super risky. And if we wanted to make it really secure, then it was really cumbersome to use. Finally, we can by using all of the functionality and features of mobile devices, connected devices, we're able to make the consumer shopping experience and payment experience convenient and secure. Things like tokenization and digitization, which I talked about, the fact that you can simply use Touch ID on your iPhone and pay with Apple Pay at, say, Whole Foods or any participating merchant, that's pretty cool, and it's actually very, very safe. To the point before, it's potentially even safer than a normal transaction. And so that is where I think we are finally coming into the era of ability to secure the payment very, very well and make it very, very convenient. And I think we'll see much greater adoption of mobile payments and mobile payment services, especially those who focus on solving a consumer need or a merchant need beyond just payment, much more quickly.
Excellent, excellent. That's an interesting point. And the second question that was raised on the chat on prior to the meeting is, You mentioned the number of players that are on the market right now, banks, card issuers, and other companies. Do you see in the future that will be a consolidation of those players in maybe 2, 3, or 4 ones that can provide the same kind of experience, or will be more players on the market and you will have to choose who is who in the different markets?
That's a great question. I think we're seeing a ton of investment by large and small players in large and small players, all the way from VCs to large companies investing in mobile payments and mobile payment technologies. I think we'll continue to see proliferation. So again, my personal view is we'll see proliferation of additional payment options and wallets and payment services across the world. Certainly seeing that in the U.S. and the developed markets. We'll see a lot more of that across the world. I think ultimately the consumer will choose a few, maybe not 1 or 2, maybe 3 or 4, but it won't be 20. And so I think in each market, you will probably see ultimately consolidation down the road. When that happens, I'm not sure. The other point to this is we certainly believe, and I believe in interoperability. What I mean by that is I should be able to pay with whatever device or method I'd like, whether I'm here in New York City or London next week or Bogota or on the beach, right? Without having to be constrained by closed loop networks of merchants or of geographic availability where I have to choose that particular method because nothing else is available, right? So, and that one further step in that direction is I should be able to also pay other people, person to person, or receive money from my employer, from the government, from my insurance company or whatever, in the way that I like. And again, interoperability is key to that. Our announcement of Mastercard's Send network is another step in that direction where we're connecting all card types and accounts, from bank accounts to mobile accounts to mobile wallets around the world, so that really, truly, you can have interoperability amongst all these different types of accounts, different payment sources, and different devices.
Okay, and one last question that is, I think it's relevant. Did you see any change on the trends in the market since the inception of the Apple Pay, for example? You're seeing a change in the trends, acceleration of this trend, or the acceleration is not so big as expected with new players like Apple Pay and Google Pay and all the companies that are going into the wallet market?
So I'd like to say that there is an acceleration. Before Apple Pay launched, and of course, Apple is a big partner of ours. We've been working on this project for 2 years plus. But it was interesting to be in a debate before we launched with Apple, where a lot of people were saying, well, Apple's not in it, so it's not going to take off. Now that Apple's in it, people are saying, well, it's not really taken off as quickly as we thought once Apple Pay comes. And the fact is, I think it is actually taking off, but infrastructure and consumer behavior takes a while to change, right? So we're seeing a lot of adoption, both by merchants accepting contactless payments through our network, and therefore being able to accept Apple Pay, and consumers who are much more comfortable more and more with paying with their devices. So I think we are seeing acceleration of the trends. We are seeing certainly in-store acceleration of the trend. Many more people are paying with their mobile devices now. Samsung Pay is out in the market as well with Android devices on Samsung. That's going to take hold as well. So I think the trend is certainly there, and I think the pace of adoption is accelerating. Then really it's a matter of personal opinion and prior expectations, whether you think that's faster or slower than you expected. I think again, I'll say, consumer behavior is not something that changes really, really quickly. And so, again, back to my point previously, it has to be, in order for people to adopt a new method of payment or a new way to shop, it needs to be multiple times better than what they were using before, if what they were using before works. And let's face it, paying at the point of sale kind of works in the developed world. It works. It's not really broken. And so we need to see a lot more value being delivered to consumers, or convenience, or rewards, or kind of the overall experience for consumers and merchants to be that much better for people to really start kind of accepting it and adopting it en masse. But I think we definitely are seeing the trend, and I think that trend is accelerating. So I feel very optimistic about our ability to innovate on top of the mobile payment trend that we're seeing already.
Yeah, we are receiving a few questions right now, and I will compress those questions in one or two more. The first one, I'm seeing here that one question about NFC that was considered the thing for the mobile payments market in the last few years, but actually there is any technology that will be a silver bullet for the wallet of the implementation, or you see that will be a combination of usability plus applications plus technology or electronics that will allow us to go deeper into the wallet integration?
So I think NFC itself is still, in my mind, the best way to enable mobile payment at the point of sale. That's the way Apple Pay works. That's the way Samsung Pay works for the most part. That's the way contactless technology works. The reason I think it's good is, one, it is very, very secure. It uses the EMV standards of chip and PIN transactions. It is digitized and encrypted. It is dynamically encrypted with one-time keys that travel with each transaction. And so it's a very secure transaction. And at the same time, it's very convenient, right? You can simply tap the phone, tap the watch, tap the card, tap whatever other wearable device you can think of, and be on your way. It's fast, it's convenient, it's secure. Of course, it requires upgrade to the terminal systems of merchants. Many have already done so. Many are continuing to do so. Certainly, a lot of it is driven by the transition to EMV, to chip and PIN or chip and signature transactions in the US. And the other big piece to it is new terminals that are coming in market by all of the large terminal manufacturers, whether it's Ingenico or Veritone or any of the others, come with NFC pre-installed, right? So any terminal you buy today, you buy the NFC pre-installed, you simply need to switch it on. And so I think that, again, this is not something that will change overnight. We have 8 million merchants in the US and 40, 50, and more million around the world. It takes time for all of those to change, but generally merchants tend to upgrade their terminals systems on average every 7 years. And as we I think ultimately we'll get there. And so in the next several years, I think we'll see a continued upswing in NFC payments. Of course, there'll be others, right? And the fact is, we talk about, here in the US, we talk about omni-channel experiences, different words in different countries, multi-channel in the UK and so forth. The fact is, we'd like to, certainly as Mastercard, we'd like to ensure that the consumer and the merchant can send or receive payments any which way they want, as long as it's secure, as long as it's well authenticated, and convenient. And so as I'm browsing down the aisle of a shop, I may want to check out, especially if the merchant compels me to do so, check out with my mobile phone through the mobile app without even going to the checkout counter and without even having to interact with the sales assistant to tap a a phone somewhere, right? So I may be able to just check out on the phone while at the store. What do you call that, right? Is that a mobile payment? Certainly it is. It's not NFC, but it certainly enables potentially a very good experience for a merchant who then can send me the goods to my house or to my office, or in time, airship them and drop them with a drone in my trunk of my car, whatever, right? So the experiences, I think, will proliferate in terms of ingenuity and creativity. Our job is to make sure that the payment associated with those is secure, is convenient, and ultimately is ubiquitous anywhere you want to use it.
Yeah.
A bit of a broader answer to you.
No, that's actually the broader view of the technology we have available. And I have two other questions that can be combined in one. Just the first one is how the point of sale terminals need to adapt to these new technologies regarding integration with different systems and online options, and if there is a trend on the point of sale system to improve the experience. And the second one that is related to this one is, did you see in the market any implementations of the mobile payments that is kind of leading the way where the market should be in the next 2 or 3 years? There is something that, aside Uber or those kind of experience, that's something that can change the way that we pay in the future?
Let me take the first one. So the trend in the POS ecosystem is, one, to be much more connected, and two, to be much more integrated. And what I mean by that is, in many cases today, you have a payments terminal that is connected to a phone line or an internet connection. You have a separate inventory management system, and potentially you have a separate checkout system that the merchant has to handle. And the three are not always connected, or are connected somehow in the back with in a way that isn't optimal. So I think the integration of those, we're seeing more and more providers that are coming out with ability to, especially in places like restaurants, ability to reserve a table, find a restaurant, reserve a table, help the restaurant manage the reservation system, even manage the order system in the restaurants, to help their the waiters and waiting staff and the kitchen staff, and the ability to then check out and pay, right, all into one. So I think we'll see more and more integration of that process, a la Apple Store style, a la the new kind of new restaurant experiences where you check in and check out seamlessly. So the integration of all these devices that are currently kind of separate will be into one, will be a continued trend, I think. And people call it different things, POS 2.0 and platforms like that. Ultimately, it's about connecting the back end with the front end, with the consumer experience, so that the merchant and the consumer have a seamless experience. They don't have to talk to multiple merchants at once. The hard problem in that is twofold. One, reaching the millions of merchants that are out there. The majority of merchants that are out there are single store merchants that are managed by a family or a small business that have bought their payment system from one ISO, their inventory management system from another company, and their kind of checkout register from somebody else. They are constrained for resources and time to figure out how to bring all this together. And it's probably not at the top of their list of priorities because it kind of works, right? So they're more worried about, how do I get another product in market, or how do I source better, and how do I service my customers better than integrating these experiences. Ultimately, integrating these experiences actually will help them service their customers better and bring new customers in the door. So that's the biggest challenge, is kind of reaching those millions of small merchants especially. The second challenge is one of kind of integration and upgrade of these devices. right? So the upgrade of the devices costs money, isn't a simple task, and the providers that are I think making strides in that field are ones that are integrating a lot of different providers of whether it's point of sale systems or payment terminals, integrating those together and then creating a simple platform for others to innovate on top. Ethor is an interesting company that started down that path and are progressing very well. Headquartered up in Canada, so that's one example of someone who is doing things differently to obscure all of the complexity in the back end for the merchant and enable others to provide kind of applications for the merchant that connect to their point of sale system much more easily. So I think we'll see a lot more of that trend of kind of checkout as a service or platform as a service type opportunities where the merchant will simply be able to, or the merchant integrator will simply be able to access that platform as a service and enable the merchant checkout experience in a much better way.
Perfect. And the second one was, did you see any on the market that will lead the way for the next generation of payment apps?
That's a loaded question. We certainly, as I represent Mastercard, we work with, we're pretty agnostic, right? We work with anyone who would like to enable the payment securely and conveniently on any device, on any app, on any merchant experience. And so we believe in making payments ubiquitous and digital and secure. That said, again, I'll say, you know, anyone who is focused on creating a better shopping experience or a better consumer experience, like I don't know that I call Uber shopping. It's actually not. So I am, I guess, shopping, quote unquote, for a taxi before I book it, right? But that engagement experience between the consumer and the merchant is ultimately what will drive adoption, and it's that everyday spend, as we said in the very beginning. You know, some other examples. I mean, I think actually Apple Pay is a great example of integrating a number of kind of authentication mechanisms, like the Touch ID, digitization and tokenization through our system, and ability to integrate with a number of merchants, both in-app as well as in the store. And I think we'll see a lot more of that omni-channel, multi-channel experience as merchants get there, right? As merchants seek to combine these different channels that they're currently using. So I don't know that I can give you a very good answer of, you know, follow this company or this app. More of a kind of a directional response of, you know, things like Uber, where they make the payment seamless. That's what I would consider a really fantastic consumer experience. Because again, we don't, just to reiterate what I said in the beginning, we don't wake up in the morning thinking, God, I wish I could pay for stuff, right? It's I gotta get to work, or I've got to go buy my wife a gift, or I gotta go buy my children something, or I gotta book that trip to the beach or whatever, right? And then payment is a necessary step in the process. If we can make it more seamless, more convenient, and secure, then it has the potential of becoming a magical experience.
Mm-hmm. Okay, I think we may cover most of the questions we have, and was a very interesting point of view for the next generation of payments that we as developers, product owners, product managers, we need to start looking forward and get that next Uber on the market really soon. Okay, Mario, thank you very much for your time today. Thank you for joining us and visiting us on our office in New York. Thank you all for attending today. And if you have any question, any comment, any request, just let us know, send us a mail, and we can connect everyone here to get the right response. Thank you, Mario.
Thank you, Pablo. Thank you, Globant. And thanks everyone on the phone.